All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Friday, everybody. Today is April 25th, 2025. And the top story this morning is the trade talks. There is good news. It seems the United States and China are talking. President Trump says he and Xi have been, or Xi called him, and there are trade talks happening. Negotiations are underway. In other news, trade talks are not happening. Chinese officials have completely denied that there's any negotiation going on, and they insist that the United States remove unilateral tariffs. So that's nice. Trade talks are and aren't happening at the same time. Schrodinger's trade deal. That is just amazing. And look, who's lying here? Is it the liars, or is it the other liars that are lying? Or maybe it's the liars who report on the liars that are lying. One thing is for sure, everybody lies. And, well, we're just caught in the middle trying to figure out what's real and what's not. One thing is for sure, though. One thing is for certain. Wall Street continues to bet on the Trump administration's total surrender in this trade war. That is kind of the optimism that I've seen. This, like, anything resembling a blink or any kind of capitulation, and the market just rips on that news. Maybe that happens. All right. The bond market is king. President Trump did surrender to the bond market last week or 2 weeks ago, whatever it was. He's denying it happened. That's totally what happened. The bond market rules all. So maybe that does happen, but the market seems, as always, to be back with those rose-colored glasses. Everything is bullish, automatically go higher. Have you seen Donald Trump's personal history? Absolute total surrender, not really his shtick. All right. He is kind of like, I'll take you down with me kind of guy, has historically been his tactic. So betting on his total surrender may not be a safe bet. Meanwhile, we've got China is said to begin doing carve-outs. Now, this is interesting. China is doing carve-outs for certain chips, which they're not supposed to be buying to begin with. I find that ironic. China is exempting integrated circuits from tariffs, even though it's illegal for American companies to sell them integrated circuits. Somebody want to explain that to me? Some of those NVIDIA bros who say they're not selling chips illegally into China, why are they carving out tariffs for something that's illegal for the United States to sell them to begin with? That's interesting, but I digress. Also, they're considering carve-outs for things like chemicals that go into plastic, airliners. We talked about Boeing earlier and late last week, and also medical equipment. Now, look, if they're doing carve-outs for specific sectors, which the United States did the same thing with smartphones and other things, that's kind of like they're settling in for the long haul here. And that's another story, another angle that makes you think maybe this like total surrender and sudden end to this war really isn't just over the horizon. I mean, if they're carving out specific sectors, it means they intend to leave them for most of the other sectors, which means they intend to take the pain. And so, that's interesting to see this morning. By the way, as the trade talks do or don't progress, I just want to say a special shout out to all of my new friends in China's 50-cent army. If you guys don't know what the 50-cent army is, YouTube is pretty much entirely blocked in China, but there are these cubicle farms full of people who just go out and downvote and automatically comment on anything that's like remotely negative about China, with China a number one ruler of the world, all that paper dragon crap. You guys are just freaking adorable. I swear I could just gobble you up and then be hungry again in an hour. So welcome, and this is a good time to remind you to like and subscribe, because we are getting downvoted into oblivion by the 50-cent army as we cover this trade war. Now, also going on this morning, we have got Saudi Arabia is supposedly, they're in the news twice here. The first one, they are pushing for more production from OPEC. This is interesting because we just got a much bigger production increase from OPEC, and the Saudis want to do it again. They want to put even more oil on the market, even though prices have been falling, and with worries about a global recession, they're probably going to fall more. So the Saudis are pushing for lower oil prices here. So what is going on here? There's a couple of different angles you could look at this. Is this an overture to President Trump, who has repeatedly called for the Saudis to increase production in order to get lower oil prices? Maybe indicators of a trade deal in the works. Put a pin in that. Or maybe this is another attack on U.S. domestic production, like we saw in 2020 or 2015, when the Saudis opened the floodgates to crash the oil prices in order to put American producers out of business. A trade war the Saudis lost, by the way. They ended up losing market share, and American production came back even stronger than it was before. Or maybe this is retaliation against other OPEC members like Kazakhstan, who have been flouting their output quotas for years, producing more than their share. Maybe Saudi Arabia is trying to punish them. I don't know what's going on with the oil dynamic there, but that is an interesting one to keep an eye on. New supply as demand is waning could mean sharply lower prices. Now, Saudis are also in the news today for a rumored $100 million arms deal with the United States that's in the works. Now, that is kind of lending a little bit more towards the overtures to Trump angle from the oil story we just talked about. They're talking about deals with Lockheed Martin, with Raytheon, General Atomics, a number of different, Northrop Grumman was another one. No word on what weapons specifically. I'm guessing it's mostly jets and missiles, maybe cargo planes also here. But there's a lot at play in the Middle East, right? The Saudis were previously at war with the Houthis, who the United States is currently at war with, even though we haven't declared war, but it's a war. They're shooting at each other. And then across the Strait of Hormuz is the Iranians, who are viewed as the Saudis' regional rivals. And those two certainly aren't friendly, but they have been cozying up to each other a little bit. And of course, China is a major player here. China they just rolled out their SIPS system, the China Instant Payment System, to rival SWIFT. They're pushing for more oil to be traded outside of the dollar. So it's interesting to watch what happens with the Saudis here. They are in the news this morning as well. India is also reportedly working on a trade deal with the U.S. This is following Vice President Vance and his family's trip to India last week. The deal is rumored to cover farm goods, e-commerce, data storage, and critical minerals. Interesting, critical minerals. That's what China just cut us off from. So there are, according to people familiar with the matter, trade deals in the works to offset some of China's retaliation here. Don't know what's going to come out of this. These are all preliminary, in discussion, proposals, all that wishy-washy language, nothing set in stone yet, but there are things happening in the back room at this point. Meanwhile, Google reported their earnings yesterday, and they reported a big earnings beat. Google stock is up this morning. Well, their ad growth was solid. That's Google's bread and butter, search ad growth. So they're seeing a little bit of growth sustained there. There have been some worries about that. Their cloud growth has slowed again. That's important because Google Cloud, that's their AI investment there, their data centers, and the growth continues to slow there. Now, it's still growing at a pretty impressive clip, 28% year over year, but that is a slower rate. So a little bit worrying here. But the big thing I want to point out in Google's earnings would have been a huge miss if it wasn't for $8 billion in what Google is calling, I have to read this from my notes here, unrealized gains from non-marketable equity securities. Okay, that's a lot to digest. Unrealized gain, so an increase in value of something they haven't sold yet for non-marketable equity securities. So they're talking about like illiquid private investments here. Now that's interesting because illiquid private investments have been in the news a lot, with Yale having to sell their private equity investments and private equity firms tap dancing through minefields to avoid price discovery, and all these things that suggest private equity investments are heading sharply lower in value because they can't find anybody to buy them. Google is marking theirs up by $8 billion, magically creating a big earnings beat out of thin air. Now, they didn't say specifically who it is. We've got a couple of ideas who it could be. We'll talk about that one as well. The AI bubble and their round-tripping scheme is alive and well. By the way, I did the AI bubble in 99 seconds yesterday. I've had a lot of people have been telling me to do more of those 99-second videos. So I put that one up yesterday. If you guys have been following this channel for more than a couple of years, you've probably seen a lot of that information. But if you've been looking for a quick way to explain it to somebody who doesn't follow this stuff on the regular, that's a pretty quick way to drink from the fire hose and get caught up to speed on the AI bubble in less than 100 seconds. We got a lot to talk about this morning. Why don't we shrink my big melon of a head and let's see what's going on in the market. Don't forget that like button and that subscribe button for you new guys. Come on back tomorrow and have your coffee with the melon heads because we do this every day. And right now the S&P 500 is down 11 points, 0.2% in the red, a little bit lower this morning. I'm surprised we're not seeing some green shoots on the optimism about trade talks. Meanwhile, the Dow is down 138 points here, about a third of 1% lower, and the NASDAQ is lower by 56 points, or about 0.29% in the red. So we got stocks are down across the board here, despite a Google beat. Looking over at some of the international indexes, the German DAX index, 0.75% higher. The British FTSE up by 0.25%. French CAC 40, that's up about 0.5%. Let's scroll down a little bit here. We've got Japan is up 1.9% in the Nikkei 225. We'll talk about Japan in just a second. And we got a mixed bag, and the Chinese index is basically a fraction of a percent up or down. Looking over at the DXY, the U.S. dollar is a little bit stronger once again here, 99.67. That's 38 basis points higher, still below that 100 important threshold. But we have seen a modest strengthening in the dollar these last couple of days. And another chart to keep an eye on, USD JPY. This chart is heading higher again this morning. Remember, guys, this chart heading higher, that is the yen weakening against the dollar. And I would just point you out to this little bit of green shoot here, this little bump here. All right. Now, is this just a little sawtooth on the way down? Are we going to keep doing that? Probably is my guess. But let's talk about what's caused some of these green candles, in particular, this one that we got this morning. This is pretty interesting. Tokyo's inflation, the quickest in 2 years as rice prices soar 93%. By the way, holy crap, 93% increase in the price of rice, which is like the main staple of the Japanese diet. Yikes. Inflation is getting away from them in Japan, and they are playing games with that inflation here. They better be careful here. The pace of inflation in Tokyo accelerated from the previous month to the fastest pace in 2 years, supporting the Bank of Japan's rate hike stance that is now complicated by uncertainty stemming from U.S. tariff measures. Consumer prices, excluding fresh food, gained 3.4% in the capital from April from a year earlier, as a mixture of impacts from last year's school fee cuts and higher food and energy costs pushed up prices, according to a Ministry of Affairs report released on Friday. The results beat the median economist forecast of 3.2%. Overall inflation quickened to 3.5% from 2.9% in March. Inflation in Japan is surging here. Now, what's interesting is the Bank of Japan is widely believed to be hiking rates soon. Everybody's been talking about when is the BOJ going to hike rates. Japan has had this incredibly insane modern monetary theory policy in place for years. They've been printing money like crazy. I mean, the most dovish central bank in the world. They finally started raising rates last year, and it almost caused a panic last summer in August during the unwind of the yen carry trade. Some of that has been creeping back into the narrative recently. But listen to what they're saying here. There is no sign of weakening in inflation from this data, said Turo Suhiro, chief economist at Daiwa Securities. With inflation staying solid, the BOJ is likely to convey at its policy meeting next week that its intention is to raise rates once uncertainties from tariffs go away. Now, I've never seen that before. This phrase, once uncertainties from tariffs go away. That's a new phrase in this narrative. All right. Everybody's been saying the BOJ is going to hike rates any day now. And inflation has gotten worse since that's happened. So you'd think the BOJ is even closer to raising interest rates now because inflation is even worse. But now all of a sudden they're saying, we're not going to do it until the tariffs go away. But the tariffs ain't going away, Lieutenant Dan. So is the BOJ not going to hike because tariffs now? It looks like that's what they're saying here. Now, I've never seen that before. There have been some phrases like, oh, we're not going to raise into uncertainty or we're not going to add to volatility. But they've never actually said we're not going to hike until the tariffs go away. Central bank officials see little need to change their stance on gradual rate increases for now, despite the trade uncertainty, according to people familiar with the matter. The most popular food staple in the country almost doubled in price from a year ago, but central bank officials see no need to change their stance on gradual rate increases. Yikes. Maybe that's why the yen is weakening this morning, because inflation is about to run away rampant, and they're saying it doesn't matter. We're not going to do anything about it. We're more worried about the tariffs. Now let's look over at the bond market this morning. The 30-year Treasury, 4.725. That is lower by 4 basis points. The 10-year, 4.270, lower by 3.5 points. And the 2-year is actually higher by a fraction of a point at 3.795. Not a lot of movement going on in bonds here. The 1-month Treasury at 4.296. That's higher by 2.5 points. It's unusual to see a bigger move in the 1 month and the smaller moves on the long end, but I digress. Looking over at the commodities board, we've got metals are selling off again this morning here. It's been a couple of days of that after a monster run in gold. Spot gold is at $3,273. That's off by 75 bucks, 2.25% lower this morning after briefly touching 3,500 just a few days ago. Silver is getting in on the sell-off here, $33.10 for spot silver. That's down by about 48 cents or 1.4% lower. We've got copper is down by 1.3%. Platinum is down by 0.9%. Palladium is off by 1.6%. And oil's lower by about 0.88%. That's on that news of the Saudis wanting more oil production. And here it is. The Saudis signal oil's route won't hold them back. OPEC leaders consider another supply surge even as crude prices plunge. A decade ago, Crown Prince Mohammed bin Salman's insistence that Saudi Arabia didn't care about the price of oil seemed incredible, but some of that sang-froid is on display now. I have no idea what sang-froid is. I've never heard that word before in my life, but I digress. 3 weeks ago, Riyadh stunned crude markets by steering the OPEC Plus cartel to unleash oil supplies. At the same time, U.S. President Trump was launching a trade war. Prices duly crashed to a 4-year low below $60 a barrel in London. The kingdom is apparently preparing to deliver another dose. Veteran OPEC watchers Rapid and Energy say the producers will probably agree to another larger than scheduled output increase when they convene next month. On the surface, this assault on crude markets centers around a dispute with the OPEC Plus alliance. Kazakhstan has said it won't make amends for months of flouting its output quota, and Riyadh wants to teach the country a lesson. There also could be geopolitical factors at play. The Saudis seek deeper ties with Trump, who has urged OPEC to bring oil prices down. Their relationship is all the more critical now as the president's team strives for a nuclear accord with the kingdom's regional foe, Iran. So a lot of geopolitical things in motion here. The Saudis are participating in it with the oil market. Now, looking over at the Bitcoin market here, $94,521. Bitcoin is higher again here by about another 500 bucks. Still above this red line. It looks to be acting as support here, right? We were resistance here. We were support before that. We hit it a couple of times. Now we've hit this line a couple of times in the last few days. It appears to be acting as support. So Bitcoin looks to be going higher here. Now, we have had some news on the Bitcoin front here. Federal Reserve withdraws crypto rules for banks, ending choke point practices. The U.S. Central Bank will now treat crypto like any other banking service instead of approaching the industry with particular caution. The Federal Reserve said Thursday evening it will no longer obligate member banks to provide advance notice of crypto and stablecoin-related ventures and will instead monitor engagement with digital assets like it would any other banking activities. The announcement comes weeks after parallel moves by the FDIC and the Office of Comptroller of the Currency, two other key federal banking regulators. Those agencies similarly clarified that banks are legally permitted to engage in crypto-related activities and are no longer required to receive explicit permission from regulators to do so. In January of 2023, in the wake of FTX's historic collapse, the three aforementioned agencies jointly issued guidance strongly discouraging American member banks from engaging with crypto and ordering them to provide notice of any such intention. So where it used to be the banks had to first ask permission to do anything with crypto, now they don't. The regulators are just saying you got to follow the laws, but you don't need our permission before you go and do something. Look, they're unwinding this post-FTX collapse regulation just in time for the next FTX, which is probably going to happen at some point in the next 6 months. Crypto winter usually starts about 18 months after a halving. And the last halving was in April of last year, which means, yeah, the next big blow up in crypto is probably within the next few months. Now, here's the big story this morning. Trump says Xi has called him and that the U.S. and China are in trade talks. This is according to Time magazine. U.S. President Trump said his administration is in talks with China to strike a deal, and that Chinese President Xi Jinping has called him, according to a Time magazine interview published on Friday, as Beijing continues to dispute U.S. characterizations of talks. So Trump says we're talking, and China says we're not talking. Somebody's lying. They're all liars, so take your guess, place your bets. Who's lying? Let me know in the comments. I couldn't tell you who it is. Meanwhile, cracks appear in China-U.S. trade war as tariffs roil industries. A lot of movement on the Chinese side this morning. Take a look at some of this stuff here. Despite the tough rhetoric flying between Washington and Beijing, the impact of such elevated tariffs on some industries is prompting both governments to consider concessions to protect their own economies. The trade war has roiled the plastics industry in China, with processors dependent on U.S. supply for the lion's share of the key inputs. Beijing is now considering suspending its 125% tariff on imports from the U.S. of some industrial chemicals like ethane, which is used in plastic manufacturing, according to people familiar with the matter. There's that asterisk. These are all anonymously sourced articles. Levies on medical equipment, too, may be lifted, as well as those on plane leases, the people said. Chinese carriers don't own all of their aircraft and pay leasing fees to third-party companies to use some jets, payments that increase with tariffs. Beijing is also preparing to waive additional tariffs on some semiconductor-related products, which they're not allowed to buy from us, Chinese media reported. The Trump administration, meanwhile, has exempted smartphones and other electronics from its tariffs, a reprieve for manufacturers such as Apple. Still, companies are preparing for permanent change. Apple aims to import most of its iPhones it sells in the U.S. from India by the end of next year. According to this report, there's India appearing to cash in on another fight between East and West. India wins every time. The use of exemptions suggests broader tariffs are here to stay, at least for now. China is insisting the U.S. drop its levies before trade talks can begin, despite Donald Trump saying talks have already started, while Xi Jinping has resisted the U.S. leader's attempts to hold a phone call. That is not a great starting point for reconciliation. So they both kind of like have their backs to one another, and they're both kind of carving out for the specific industries that they like. They're kind of like negotiating, but not negotiating without talking or even facing each other. I don't know. There's so much conflicting news on this trade war, and it changes so fast. It really is frustrating trying to keep up with this stuff. But we will report it as it is reported, guys. And then we've got this one from the Saudis here. Trump is poised to offer Saudi Arabia over $100 billion arms package, sources say, another anonymously sourced article. The United States is poised to offer Saudi Arabia an arms package worth well over $100 billion. 6 sources with direct knowledge of the issue told Reuters, saying the proposal was being lined up for announcement during President Trump's visit to the kingdom in May. The offered package comes after the administration of former President Joe Biden unsuccessfully tried to finalize a defense pact with Riyadh as part of a broad deal that envisions Saudi Arabia normalizing ties with Israel. You may recall the fist bump diplomacy and that whole silly episode because President Biden had called Prince bin Salman a pariah over the murder of an American journalist who was hacked up into pieces and carried out of the Turkish embassy in duffel bags. Remember that? Oh, yeah. That whole thing, that made an arms deal pretty difficult to happen. Relations between Trump and bin Salman, maybe they're better than they were between Biden and him. I honestly don't know. But the Biden proposal offered access to more advanced U.S. weaponry in return for halting Chinese arms purchases and restricting Beijing's investment in the country. Reuters could not establish if the Trump administration's proposal includes similar requirements. Now, that last part is a big deal here. Part of the goal of this trade war and part of the goal of these trade negotiations with other countries is to isolate China economically. Now, Biden couldn't get a deal with Saudi Arabia, mostly because Biden and bin Salman hate each other, but also Biden was insisting that the Saudis cut off the Chinese as terms of that deal. We don't know if this deal Trump is offering includes that provision. That's an important one. Keep an eye on that. Meanwhile, the U.S. seeks an India trade deal on e-commerce, crops, and data storage. More trade talks happening here. A U.S.-India trade agreement under discussion will cover 19 categories, including greater market access for farm goods, e-commerce, data storage, and critical minerals. People familiar with the matter said the first step toward a deal that may help the South Asian nation evade higher tariffs on its goods. The terms of reference for a bilateral deal, which was finalized by both sides this week, includes trade in goods as well as services. The people said, asking not to be identified, because why would anybody start naming their sources now? Other so-called chapters covered in the trade deal are corruption and rules of origin. That's interesting. The initial agreement, announced after U.S. Vice President J.D. Vance's meeting with Prime Minister Narendra Modi in New Delhi on April 21st, lays out a framework for negotiations for a trade deal that India hopes will give it a reprieve from higher U.S. import taxes. President Donald Trump slapped India with a 26% reciprocal tariff, currently on hold until July. They're back on 10%. So looks like the one thing I want to zero in on is those critical minerals, that deal with India. I don't know that India has the same critical minerals that China has or natural reserves, but that is one thing the Chinese are using to try to hit American industry, in particular the defense industry, is those critical minerals. If we can sign a deal with India to supply those, that will be a big win for the Trump administration. Emphasis if we're talking about preliminary frameworks to kind of hopefully maybe one day have a deal, according to anonymous sources. All right. Meanwhile, Google earnings. All right. On the surface, it was a big beat for Google. Google says deep AI investments powering ad sales, soothing anxious investors. Now, Alphabet's ad revenue growth outpaced analyst predictions. That was probably the best point there. The ad revenue growth for Google, that's a big one. That's their bread and butter. You want to see that safe. There's been some worries about AI eating into Google's ad revenue. That isn't happening yet. Now, Google's cloud revenue growth slowed to 28% from the previous quarter. That's important because cloud revenue growth has been slowing for several quarters now. That 28% growth is still an impressive clip, but it's been declining. And I mean, that would suggest eventually that growth is going to stop. That's reflective of the AI bubble narrative and that they're having to blow harder and harder to keep things inflated. Google parent Alphabet reassured jittery tech investors that its AI investments were powering returns at its crucial ad business on Thursday, downplaying any impact from global economic uncertainty for now. The search giant's first quarter profit and revenue beat expectations, and the company said it would buy back $70 billion worth of stock, pushing its shares up 4% after market and adding $75 billion to its market value. Alphabet reaffirmed its ambitious AI build-out plans and backed its $75 billion CapEx guidance for the year, offering hopes for investors in Meta and Amazon, whose shares also rose in aftermarket trading. All right, that's an important data point there. Alphabet is sticking to their guns on their $75 billion CapEx guidance. They are not cutting the number of CapEx. That's the important numbers there. Everybody's sticking to their CapEx guns is how they're keeping this AI bubble inflated. That's how they're supposedly maintaining NVIDIA's earnings, by pledging to buy billions and billions of dollars worth of these GPUs. No sign from Alphabet that that is going to slow. That's an important detail. Let's see. I saw this narrative around, this is a quote from some guy, Will Rind, the CEO of global ETF issuer Granite Shares. I saw the narrative around infrastructure spending as being one that was particularly a negative narrative in the market, suggesting that AI investments had peaked and that this was a sign that the bubble was deflating. And I think what Google told us today was that is absolutely not the case. Okay, that is from this Will Rind guy who sells ETFs, which are probably invested in these companies. But he's got a point here. Google is not scaling back their CapEx, not even a little bit. So even though there's indications that Microsoft and Amazon are pulling back on their data centers, Google is not. Google is one of the other big hyperscalers. So they are full speed ahead still. Revenue from Google's mainstay ad business, which makes up nearly 3/4 of their overall revenue, rose 8.5% to $66.89 billion in the quarter. That is a slowdown from the prior quarter's 10.6% increase, but still above analyst estimates of a rise of 7.7%. But here's the big thing. All right, there was some good and there was some bad in Google's earnings there, right? The number was great. The bottom line number was good. Here's the thing. The bottom line number was almost exclusively driven by this. Shout out to Indexbox. This is my first trip to this website, but this is a pretty well thought out article here. Google's $8 billion windfall from private investments. You see, Google's earnings were totally dependent on these private investments. Google's recent earnings report revealed an unexpected windfall as the tech giant recorded an $8 billion unrealized gain from its investments in private companies. This notable increase was highlighted in a recent article which detailed how this gain contributed to Google's net income soaring above $35.5 billion for the quarter compared to $23.7 billion from the period last year. If you take away that $8 billion unrealized gain, Google's earnings would have been a huge miss. While the exact source of this gain remains undisclosed, speculation points to several potential candidates. Among these are Anthropic, a company in which Google holds a 14% stake and whose valuation surged from $41 billion to $61.5 billion earlier this year. SpaceX, another significant investment, saw its valuation double to $350 billion. Additionally, Databricks and Stripe have also experienced substantial valuation increases, further contributing to the potential sources of Google's financial windfall. Despite the significant impact of Google's financials, the focus among analysts remains firmly on the company's core business operations, particularly its ad sales. This emphasis on core business metrics may explain the lack of attention given to the $8 billion gain during Google's earnings call, as noted in the article. Nonetheless, the rise in valuation of these private investments underscores the potential for substantial returns outside of Google's primary revenue streams. Yet it also underscores the potential questions around whether this stuff is real or not. Now, look, a lot of articles like Bloomberg is out there. They're attributing this mostly to SpaceX. They're saying SpaceX is the reason why Google took this $8 billion gain. But SpaceX, that big surge in SpaceX valuation, that actually happened in December of 2024. That didn't happen during this quarter. One thing that did happen during this quarter was Anthropic sees a Series E funding raise at $61.5 billion post-money valuation. Now, look, Google made a $3 billion investment in Anthropic years ago. Back then, Anthropic had like a $16 billion valuation. 16 and a half, I think, was the actual number. So Google buys $3 billion of Anthropic at $16.5 billion. But then all of a sudden, last month, Anthropic raised $3.5 billion at a $61.5 billion valuation. All right, so they only actually took in $3.5 billion, but they valued the company at $61.5. Now, that would almost quadruple the valuation of Anthropic's shares. And, well, if Google had a $3 billion investment in Anthropic, that gets you pretty close to that $8 billion number there, doesn't it? Now, here's the thing. Anthropic lost $5.6 billion last year. So think about how this AI bubble can just manufacture money out of thin air. All right. Anthropic raises $3.5 billion from Wall Street firms. That makes Google's $3 billion investment magically worth, say, $11 billion. And at the end of the day, we're talking about a company that lost $5.6 billion last year. This is the round tripping of the AI bubble laid bare. At the end of the day, this is being propped up by a business, Anthropic, that loses money like a drunken sailor, has no path to profitability, and they're actually losing money at an accelerating rate, not a decelerating rate, meaning they're getting further and further from profitability. And yet, like magic, $8 billion appears in Google's earnings. You just cannot make this stuff up, guys. And this is exactly what I was talking about in the AI bubble in 99 seconds, how they're doing it. It was pretty well timed, apparently. And last but not least, guys, a real quick one I want to mention. BYD earnings, that's the Chinese electric vehicle maker. Their net income doubled from a year ago, racing past Tesla in their latest milestone. Guys, that's one you got to keep an eye on. There's no shortage of bad news about Tesla recently. BYD has been eating their lunch, gaining market share like crazy in China. They're pretty much running Tesla out of China. The tariffs is going to make that even worse. But also they're making inroads in Africa and South America and Europe. Europe put tariffs on EVs to try to block it. BYD is an up-and-coming major player in the EV space now. Keep an eye on that one. And I just want to say thank you so much to Viv B, who gifted 5 Nobody Special Finance memberships. Thank you so much, Viv, for supporting the channel. I appreciate that. And welcome you 5 new melon heads. And I hope you enjoy your stay. And wait, hold on. We also have to thank M&J, who gifted 10 Nobody Special Finance memberships as well. M&J, thank you so much for everything you do for the channel, as well as your services as a Blue Wrench. Thank you so much for keeping things neat and tidy and civil in the chat. I appreciate that very much. Guys, being a moderator is a thankless job, and they do it well. So thank you so much to M&J and my other mods. Mish, Nan, you guys rock. Jason Bennett says, yen carry trade in 99 seconds has my vote next. All right, that's an interesting one. I might need to give Michael Gayed 30 seconds of that, or maybe I'll give him a few seconds. If you follow Michael Gayed, you might know what that means. That's interesting. Yen carry in 99. Okay, that might work. Those are labor-intensive videos, guys. They are editing marathons. The first cut of that video was like 6 minutes long, and you got to manage that thing frame by frame. We trim them by hundredths of a second to get them down into 99 seconds. But that's not a bad idea. Yen carry in 99 seconds. Thank you, Jason, for the idea. I appreciate that. Gordon Guanu, thank you for supporting the channel, sir. He says, your 99-second video, let us drink from the fire hose without having to find the marble in the oatmeal. Who gets that reference? Drink from the fire hose, I know for sure, is UHF with Weird Al Yankovic and Michael Richards. Was the marble in the oatmeal, was that one of the games they played on the TV station? I'm going to go with UHF, although I'm not sure. Did I get it right, Gordon? Let me know if I got that one right. But thank you, sir, for supporting the channel. I appreciate that very much. And Jeff, thank you, sir, for supporting the channel. He says, thank you, Jack and crew. I benefit from your daily videos and appreciate all your hard work. Jeff, you are welcome, sir, and thank you for supporting the channel. I appreciate that very much. I'm glad you're finding the morning updates helpful. Thank you so much for the good vibes. KDM also gifted 5 Nobody Special Finance memberships. We got a lot of new Melonheads this morning. Welcome, Melonheads. Guys, remember, when you're a Melonhead, you also get a free super chat. I believe it's one a month. Feel free to use those, and I will read your questions and respond on the air. Thanks again, KDM. Uncle Fedster says, happy Friday, Jack. Trump and China are both full of it. Yeah, that's the one takeaway there, Uncle Fedster, right? The Trump administration, they lie. Everybody lies. The Trump administration is no exception, and they actually excel at it. Let's be honest. In some ways, they really excel at it, right? The Trump administration lies. The Chinese Communist Party, you think they lie? Yeah, they lie. The press that's covering both sides, you think they lie? You bet they do. So who's lying? The liars or the liars or the liars who cover the liars and the liars? I don't know. Somebody's lying. Probably all of them. Only safe bet. Thank you, Uncle Fester. You can't make this stuff up, can you, brother? Conductor of the partial claim gravy train. All right, Wes, with the Command and Conquer General 0 hour thumbnail there. He's referring to the FHA workout gravy train that Melody Wright and John Comiskey have done such an excellent job covering. I agree. He says, all I know is the inverse correlation between China tariff rates and Temu ads on YouTube brings me happiness. Yeah, Temu, Shine, Wish.com, all that crap, right? The cargo plane full of rubber dog shit out of Hong Kong that they talked about in Top Gun, all that garbage. It's now for sale on Shimu and Shine and all of them. You don't see those ads anymore. It's interesting. I wonder why. Probably because nobody can afford to buy that crap anymore because of 145% tariff on it. 145. You think that maybe that escalated just a little too quickly? I mean, there was an article today that said, I think Trump said he envisions us coming out of this with a 50% tariff, and that would be a huge win. 50% tariffs is a huge win. Okay. Maybe we'll just breeze right past that. Somehow the cost of things going up 50% doesn't strike me as a win. It's only a win if we start making the stuff in the U.S. leading to real wage growth among Americans. That's the only way this trade war becomes a win. All right. By the way, for anybody who's wondering, like, how do you measure victory? How do you quantify victory? All right. Growth in manufacturing jobs domestically with real wage growth, that is wages rising, adjusted for inflation. That is how you measure a win in this trade war. That will take years to show up in the data. That will not happen in weeks on Bloomberg or CNBC. No freaking way. And I can tell you, Wall Street and the Federal Reserve and Silicon Valley will all fight that tooth and nail. They don't want that result. They're making too much money on outsourcing. Thank you, conductor of the gravy train. Gomers 44 says, so we can go into the bank and exchange fiat paper for crypto, but we cannot exchange fiat paper for gold. Okay, got it. Thanks, Jack and Mods. Well, I don't know that you can actually go into the bank and do it. I mean, you could try it. I think it probably won't work. You can't like walk in there and buy Bitcoin. But what happens now is I think banks are able to make loans to crypto companies. Banks are able to buy stakes in crypto companies. Banks are able to offer instant payment services to stable coins, right? Or maybe they're underwriting stable coins, because stable coins make instantaneous transactions for billions of dollars in the crypto market, but they do it during hours the banks are closed. So there are offsetting TradFi transactions that go along with that. Maybe the banks are offering that service. There is absolutely risk that comes along with that. Absolutely. That was a big player in Silvergate Bank collapsing in 2023. That was a big player in Silicon Valley Bank, and that was a big player in Signature Bank. All three of those had a lot of fingerprints in crypto, and those banks went down not too long after the FTX collapse. Now, the FTX collapse wasn't the singular cause of those bank failures, but sure as heck didn't make it any better, that's for sure. So, this is more risk being introduced into the banking system any way you look at it. And guys, I mentioned it a couple of days in a row here, the fraud and the scams and the grift in crypto. I can see it getting worse in real time because the SEC is pulling back from it. The bank regulators are pulling back from it. The scammers think it's all clear to go ahead and run their scams and nobody will come after them. And let's be honest, white-collar crime has been basically legalized in this country, hasn't it, or all over the world for that matter. And it's not exclusive to crypto. It's particularly rampant in crypto. So just have your guard up, guys. Be careful, especially in those altcoins. Good God, this crap. Thank you, Gomers, for supporting the channel. Nashville Pasta Man says, we know who got the goodwill impairment charge. Who do you think got the goodwill impairment charge in Google? I don't know. Maybe it was China and their 50-cent army. Maybe YouTube took a goodwill impairment charge because the millions of monthly active users on YouTube who are really just agents of the Chinese government who just downclick anything China related for fun. Maybe that's the goodwill that was impaired. I don't know. But I tell you what, though, man, those private investment markups on the Google earnings, when you just manufacture $8 billion of income out of thin air just by saying this thing we bought that we can't sell is worth more and therefore we made more money. Be careful, guys. Big tech, you're playing a dangerous game here, and they're blowing harder and harder to keep this bubble inflated. Without that $8 billion charge, we would all be talking about how terrible Google's earnings were and how the AI bubble has already popped. Thank you, Pasta Man, for supporting the channel. Richard Bell says, is there enough minerals to keep EV going? As far as I know, the big limitation on EVs is lithium, and we do produce lithium in the United States, not enough to keep it all going. Honestly, I couldn't really tell you. There's a lot of things like neodymium, right? Neodymium are those super powerful magnets. That we get almost all of it from China, and that is very important for servo motors and things like that. So the EV, the rare earth minerals is a big question mark. We have deposits here in the United States. Our environmental laws are too strict. We don't let ourselves access them. We're trying to get this deal with India to expand our access to those minerals there. Why? Because if you dig up dirty minerals in India, it's good for the environment. If you do it here, it's not good for the environment. That's at least what the environmentalists say. I don't make the rules. That's just what they do. So is it enough to keep EV going in China? Yes, it's going to be an issue for American producers for sure, but there are deals in the works for that. Thank you, Richard Bell. Good question. Armando Reyes says Trump didn't like how his assets and finances were about to be seized. The whole family was affected one way or another. They are changing things. Well, look, they did go after Trump, right? The whole lawfare thing, and they tried to seize the assets and all the trials. But, I think we're also kind of like glossing over the fact that they tried to kill him twice. That's another big one. You reckon maybe he took that personally? I don't know. Like, I think it's hard to not take that personally. You could do the whole like Abe Vigoda, tell Mikey it wasn't personal, it's just business, right? Maybe that's what it was. But I think President Trump may have taken multiple attempts to kill him personally, and now he's pissed. I just throw him out there. You do what you want with him. Thank you, Armando, for supporting the channel. Nashville Pasta Man says 99 seconds on negative interest rates. Yen carry in 99, negative rates in 99. That's interesting. By the way, Switzerland is rumored to be headed towards negative rates again. Pay attention to that one. Switzerland is a safe haven asset. The Swiss franc is a safe haven asset. Everybody's piling into the Swiss franc for safety as the world de-dollarizing. That's one of the benefits there. But also remember, the Swiss banking system had some big problems recently. They had the collapse of Credit Suisse, and UBS just bought all of that problems. And so when I hear about they might be lowering rates in Switzerland, possibly into negative territory, keep an eye on UBS. Call it a hunch. When you said negative rates, it reminded me of that one. That's one I've been watching, Pasta Man. No, nothing definitive on that front yet, but that's worth watching. Thank you, brother, for supporting the channel. And Gary Cronin, thank you so much for supporting the channel. It appears nothing to say, just being a swell guy. Thank you, Gary. I just want to check the chat, make sure you didn't miss anything. Nope. Gary's just being swell. Thank you so much, Gary, for supporting the channel. I appreciate that very much. Thank you, everybody, for the super chats this morning for supporting the channel. I appreciate that generosity. Thank you also to you magnanimous melonheads on YouTube and Patreon for everything you guys do for the channel. You guys rock. There's links down below to all that stuff. Should you feel so inclined, check out that 99-second video about the AI bubble when you have a chance. I think you'll enjoy that one. Also, don't forget to like and subscribe on the way out. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.